Well, time now for Futures in Focus. And we were just talking about carbon prices and the record high there in Europe. Let's continue on that. Joining us now is Saad Rahim, Trafigura Group Chief Economist and Global Head of Research. There's a lot to get through, particularly the quarter that you guys just had as well. But let's start with this carbon pricing. You guys just launched a power and renewable trading division this year. How big does it get? What's the uptake? What's the activity?
Alex, good to be with you today. Look, I think as you've described, really, this is a big initiative for us. This is really about creating a third pillar of the business for us, in addition to our energy division and then our metals and minerals. So we think that this is definitely a significant area for us going forward. It's an area we're investing quite a bit of resources into. And really, we're hoping that as part of the energy transition, this is an area that really does become on par effectively with the other two as time goes on.
Saad, good afternoon. Guy in London. Is carbon pricing a one-way bet? Is it just going to go up from here?
Well, it's always hard in markets to say if something's just going to go on a one-way ride. But I think where we're looking at right now is the constraints that are being put in, the allocations that are changing around this. But globally, if you're looking at it, we're seeing China with, very aggressive climate targets, Japan following, and then, of course, Europe. And let's see what comes out of the U.S. But really, this seems to be the way that we're going to have to drive the energy transition forward, is by, through a higher carbon price. And this seems to be the way that governments are choosing to really go about doing it. There will be regulation, but it always really comes down to price as well.
If I read any research note going into 2021, everyone seems bullish on some kind of metals because of the decarbonization theme. You need stuff like copper to make cleaner things. Are you seeing that on Trafigura's end? Are you seeing more demand? Are you seeing more trading?
Absolutely. The key to unlocking the energy transition is made of copper, basically. What we're looking at going forward is that this is a market that is set to grow by 1/3 over the next 10 years. So if you think about it in the oil market terms, that's like adding 30 million barrels a day of demand over the next 10 years. And it's really across everything. It's a multifaceted, multi-regional, structural bull story here for this metal, where you're looking at it saying, okay, this is electrification, it's renewables, it's electric vehicles, it's automation, it's 5G, it's really everywhere you look. And all these trends are really structural. We're talking about urbanization, we're talking about income development, growth, and really copper is going to have to go into all of those things. And yet on the supply side, you're saying to meet that demand, we can only really identify about half of what we need of that growth going forward. So, really we're looking at saying, okay, the incentive price here has to move much higher in order to get these projects off the ground and to get that metal into the market. But as you say, it's not just copper. It is also what we're seeing around nickel, around cobalt to a degree as well. But really for us, kind of the screaming story out there really right now is copper. And it's really that, if you are looking for a one-way ride, that really seems to be it right now.
Okay. Do I need to put oil and copper in separate buckets? Are they on different tracks now?
I think globally we're looking at, from where we're sitting, very healthy recovery starting in the global economy. We're looking at a multi-year, I think, commodity upcycle here across all these different commodities. Really, though, it is a question of, are we moving from an oil economy to a copper economy? And I think that's where we are headed to in the next few years. But in the meantime, I think oil it's not a healed market, but it is a healing market. We are seeing people start to move again. We are seeing people look beyond kind of when the vaccine rollout starts to happen and start to say, look, start to plan trips, start to look at, basically movement again. And I think as that starts to come in, given where we've gone on the supply side there as well, I think you start to see what looks to be a relatively healthier market going forward. It's just that the dynamics there aren't quite as clean as they are for some of the other, the other commodities, in particular on the metal side. Mm-hmm. But there too, you are looking at years of underinvestment running up against what should be healthier demand going forward for some time.
So, Saad, what's the opportunity set for Trafigura? You guys had killer net income this year, but a lot of that was generated because of trading in oil and playing backwardation. That might run out and not necessarily be able to present the same opportunity for you guys when it comes to copper.
Well, actually, our metals and mining division also had its best year ever as well. So it really was both sides of the coin and both sides of the business. And look, I think contango, markets really are one type of market to trade in. But, if you just trade one kind of market, you're not going to be a commodity trader for too many years. So really for us, backwardation across the commodities that we're seeing now in oil and copper and everything else, really to us is a sign of a healing global market, right? We are, as a trading house, we are going to be structurally long oil, structurally long metals, but really, frankly, at the end of the day, we're structurally long the global economy. So if we're starting to see backwardation, that's healthy demand. That's telling us that we're looking to set up for really move higher across all these things. And for us, it's really about facilitating the global trade around those commodities as demand starts to pick up. And in some cases, what we're seeing is you don't have the supply to meet that. That is creating dislocations.
Yep.
And that really is the job of a commodity trading house, right? Is to address those dislocations. So for us, we're looking ahead and saying, this is really a market in which we think we can continue to perform.
Saad, do you think there's money going to be made in hydrogen? If so, how do I make it? Do I want to be kind of short nat gas? Does ultimately hydrogen replace that market? Does the price of carbon need to get up, I don't know, 50, 60 bucks before we get to a point where hydrogen becomes competitive? I'm just curious how we get that evolution and how it's going to kind of play out in the markets.
Sure. Well, I hope this might be made in hydrogen because we have made a few investments in it recently, and I think that tells you sort of where our view on this is. But we do see this as part of the energy transition going forward. It is, again, another key component of this. And hydrogen can serve both as storage, it can serve as a fuel, so it has multi-purposes around this. The carbon does come into it as part of, again, facilitating, accelerating that energy transition. But I mean, again, you're going to require platinum to be used in some of the hydrogen fuel cells, some of the infrastructure required to transport the hydrogen. Again, more and more you're using renewable energy to produce the hydrogen and also as a form of storage. So they kind of go hand in hand together. So to me, again, that's an area where we see a lot of demand growth coming out.